Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Chuck Fuller, Portfolio Manager at Nasdaq Dorsey, Wright, to discuss shifts in asset class and sector rankings and if we are out of the bear market woods. Chuck, it's great to see you as always. Welcome back to Trade Talks.
Yeah, thanks for having me.
And we've been talking about this since the June-July timeframe that we're seeing equities make a move back up, and it looks as if it has taken over the spot and cash.
It has, right. So, I think we talked about it last month that in our asset class rankings, cash had gone above U.S. equities. First time in a long time. We've actually seen that move back. So that now U.S. equities are at number 2 in our asset class rankings, and have a decent buffer. I think they're actually above by about 21 signals this time. So it's not one of these deals where it's likely just to flip in one day and go back to be more defensive. We're also seeing some pickup in some of our other indicators. So, if we look at the percentage of stocks in the S&P 500 kind of above their 50-day moving average, that's now at 92%. It moves above 90, kind of off of a low or really rare and very bullish. When you look at the kind of forward stats on this type of thing, you average about 25% return on the S&P over the following year. So that's gotten us, pretty bullish on the market there. And also we've had our NYSE high-low indicator reverse up from below 10. I think we had talked about that before on previous ones, but that's another one that has a good long track record. We've got data on that going back to 1980, and something like 95% of the time when you see this happen, it's it ends up being a good thing going forward. So things are definitely looking good.
And if we take a look at sectors here, starting to see technology make its way off the bottom, that has historically lended to leadership as well.
Exactly right. So I think they're number 7 out of 11. They were lower, but they're definitely one of the more improved sectors. Over this last couple of months that we've been rallying. Up at the top of the ranks, we have consumer staples, which kind of makes sense given that we've been in a bear market most of the year. But they have seen deterioration over the last couple of months during the rally. And actually, energy is number 2, and interestingly enough, oil has kind of gone down over the last little bit, but energy stocks have been able to gain more steam on a relative basis, versus some of these other stocks, which has been fairly interesting.
And how about fixed income with one of the historical worst starts to the year?
Right. So fixed income, usually it's a type of thing where, stocks go up and, fixed income is relatively uncorrelated, but this year, obviously, they've kind of been moving in tandem. And we've seen, some interesting improvements out of that space too. So when we look at the 10-year yield, that kind of broke major support at 2.7% here fairly recently. It's kind of rallied back a little bit, but seems to be forming some kind of base here. And that drop in yields has allowed bonds to move up in price. And we've seen, on their point figure charts, kind of the aggregate bond index has made a series of buy signals off the June bottom, and also broke through its May high. And it also seems to be forming a base along with rates. And then we're also seeing, more equity sensitive fixed income areas. So places like, high yield and convertibles, unsurprisingly, they're doing pretty well as equities have rallied. I think they're up, somewhere around 6 to 10%, depending on what you're looking at.
And finally, Chuck, to wrap up here, commodities still ranked number 1.
Yeah, so commodities, they've been the place to be this year, and if you can allocate towards them, they're still, it's been mostly an energy game. Energy is still number 1 in the space, despite the fact that oil has cooled off. Oil is now below $90 a barrel. But to complement that, you have natural gas, which is one of the hottest things out there. It's gone up, I think maybe close to 65%, something like that, off the bottom. Again, kind of late June. Obviously, a lot of that's kind of war driven with the situation in Europe. But it just kind of shows you, the energy space isn't all oil. There are other things to look at there. But looking at the commodity space as a whole too, it has stabilized. It kind of sold off in June along with all risk assets. But it's stabilized here. And when we look at a chart of, let's say, like DBC, which is kind of a broad commodity ETF, it's been able to give a buy signal off the bottom. So there's still some rays of hope in the commodity space too.
All right. Chuck, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks.